On 19th April 2023, while assisting the Australian Office of Financial Management on a 14 billion bond issuance, ANZ sold a significant volume of 10-year bond futures around pricing, putting downward pressure on bond price. ANZ didn't disclose to its government client that it still had significant volumes to sell or offer a chance to delay pricing. Conflicts of interest arise because, being the manager, ANZ accepted the significant risk associated with 10-year Australian bond futures, and ANZ was expected to sell 10-year bond futures to pre-hedge the anticipated risks. ANZ would receive no fee or spread for accepting the risk of acquiring the significant number of 10-year bond futures. It would only make a profit or loss from the difference between the price at which it acquired the bond futures from investors and the price at which it sold an equivalent volume of those contracts in the market during its hedging. When it comes to selling strategy, the least risky approach for ANZ is sell at the risk in as small as possible a window just around time of pricing. However, this course of action will disturb the market. The converse would be ANZ selling the risk over a period of days leading into pricing. This would enable a smooth execution with very little impact to the market, but would expose ANZ to very material market risk. The correct approach, therefore, lies somewhere in the middle. On 19th April 2023, ANZ determined to sell about 65,000 contracts of bond futures in less than 2 hours, knowing that such selling would have a downward impact on the price of the bond futures, and did not inform the regulator in advance about its trading strategy. ANZ also misreported turnover data for almost 2 years, overstating volumes by tens of billions of dollars used in dealer selection. ANZ has admitted unconscionable conduct and misleading the government, and it accepts a combined 125 million penalty as appropriate, including a record 80 million for unconscionable conduct. In the bond trading case, ANZ was trusted by the government, and its misconduct had the potential to reduce the amount of funding available to the government. This funding is used to support health and education systems, affecting all Australians. As mentioned by ASIC Chair 𝗷cie𝗶H, when public funds are put at risk, every Australian pays the price.